In this video, we're going to talk about my retirement. Yep, that's right. In 7 days, I'm going to retire from the 9 to 5. So we have to talk about how are we going to generate income in retirement. We go from an experiment over the past 5 years where I've generated $433,000 selling premium. I've shown you that over the years. Now we need to talk about how we go into the new year. You're going to love this video, so stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, I'm back behind the mic fired up because we're going to talk about my retirement. That's right. We're going to talk about how I'm going to generate cash flow in retirement, hopefully to live the good life. Now, look, if you've never been to my channel, let's get this out of the way right now. I come back every single week showing you timely and relevant covered call trades. We talk about the selling premium strategy to put real money on the table. This is what you're about to see. The cash flow that I have put on the table paid the bills. This is not a stock appreciation, coulda, woulda, shoulda. Stock goes from $1 to $100. This is where we use our stocks or our cash. We leverage that to then sell premium, generating near-term cash flow, quite frankly, quite a bit of it. This is what we do. We sell premium, we generate cash flow so we could pay some bills, live the good life. So buckle in. You're absolutely going to love this video. Speaking of that, if you like what you're hearing today, I want you to subscribe to the channel. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. All right, so let's get to this. I'm going to show you the past couple years of my total income tracker. By the way, all of my spreadsheets are free. CPTdashboard.com, you know this. Go there, get your free spreadsheets, offer them up for free so you keep the numbers in front of you. What are you waiting for? I offer them up for free. No spam and no advertising. Of course, you know I've been doing this since 2016, and around 2019, I started to really get serious with my total income tracker. So what I want to show you here is a progression of how I've done this and how well I have done. We're going to get to the part of how I'm going to generate cash flow in retirement, but let's start with this. So 2019 was one of those years where I'm starting to get into the covered call strategy. I'm selling cash secure puts. I'm much more comfortable, and in fact, I'm doing hundreds of trades, in and out, hundreds of trades. So this is my P&L for the year 2019. So I want you to focus on the individual months. So as you can see, this is all pre-tax. Because everybody's tax situation is different. But in 2019, I was able to generate $49,000 pre-tax using the selling premium strategy, writing covered calls and selling cash secure puts. Now, some months are better. Remember, I'm at the 9 to 5 at this point. So as you could see, with a goal of about $2,500 a month, I'm starting to get my rhythm here where I'm generating $7,600, $6,700. The months can be inconsistent because at this point in my trading, I'm not a consistent selling premium trader, which is okay because we have to get our experience. We have to get in the game. So as you can see, in 2019, I had many green months where I achieved my $2,500 goal. Now you can see we're in 2020. I'm really starting to get good at this now. I now have the experience and I'm now going for it. We're all in. And 2020, let me throw in a little reminder of 2020. This is when the vid hits, and to be honest with you, the market crashed. It did not sell off. It literally crashed, and here we are using a portfolio that's approximately $225,000, and I've been using that number for many years. The reason for that is most people out there through hook or crook or luck have about $225,000 in a portfolio. Now, if you use that, I'm showing you how I use my selling premium portfolio, about $225,000. Now, what does that mean? I'm in and out of trades all the time, so sometimes I'm using less and sometimes I'm using a tad bit more, but for the most part, it's $225,000. Now, with that said, 2020 was a banner year because of the volatility. I've told everybody this. We want the stock market to have these huge swings up or down because my belief is the stock market will always come back. Why? It's the only game in town for which you can make quick, sexy money, and Wall Street knows this. And if you've noticed over the past 10, 12 years, it's been the greatest near-term bull rally we've ever experienced. Well, there's a reason for that. They are using the market to generate the fast buck, and now they're proving it in a market that had crashed. Well, they bounced it back up, and it finished plus 25% for the year. I'll tell you what, 2020 was a banner year, and you can see having a $22,000 month, I'm absolutely killing it. We made $109,000. That was an all-time record. So now I'm really in my groove. This is 2020. Let's take a look at 2021. Now, 2021, we're actually continuing what we did in 2020. Notice the year is starting out red hot. $11,000 month, a $23,000 month, a $17,000, 15, 11. Look, I'm using about $225,000. Okay, so yes, some of the months I might use 300, but some of the months I'm using 150. So look, I'm using $225,000 as a base, and we're working that. Okay, so cash on cash, see this right here, 46%. Cash on cash of $225,000, generating $104,000 of cash on the table. That's 46%. I'll tell you, we had a phenomenal year in 2021. At this point in my trading, think about where I have come from. I went from 1 trade, 2 trade, 3 trades, and I really was getting my feet wet. My mentor Jerry's helping me. Life is good. Then, about mid-year 2016, I'm all in. I have about 5 stocks, and now I'm making about 5 trades a month. And again, at this point, we're not using $225,000. That year in 2016, I end up making a nice little profit of $18,000. But what I really profited from was financial freedom. Hey, look, at this point, I am now ready to rock and roll. And here is where we're at in 2021. By this point, I have generated cash on the table, $377,000. Now, during this time, my portfolio, this $225,000, it is ebbing and flowing with the market, right? We use that $225,000 as if it's tools in a toolkit, okay? A tool bag for which I'm going to use these stocks to generate income. So I'm going to have stocks that are up, stocks that are down. We need to use them regardless of where they're at to generate the cash flow I'm talking about. So in 2021, $104,000. And since 2016, it's $377,000 cash on the table paying the bill. Now let's fast forward to this year and where we're at. This year, the stock market's tanking, and throughout the year, I'm able to generate some positive months. Now, at this point, I'm using a lot of smaller positions. I'm trying to use the poor man's covered call. I'm trying to pick up a crumb here, crumb there. The stock market is crushing people. Look at the stock market. It's down 14% as we sit here and make this video. Right now, cash on cash, I'm up 25%. But look, the portfolio's down. We don't have the $225,000. We have the positions or the stocks. And look, we're using them. We're picking up crumb after crumb after crumb. It is not $1,000 crumbs. It's 100 here, 300 there, maybe a $500 trade. But what we're doing is we're spinning them. We're not sitting on our hands. We're not in the fetal position. We're generating cash flow in a market that's very taxing, okay, on your emotions and on the overall portfolio value. One of the big questions I get all the time now, I am seriously down on some positions and I'm still selling premium on those positions. Well, I started this in 2016. And remember, this is a dynamic strategy of selling premium. So as you learn this, you'll be able to sell premium against shares that are considerably lower. Now, that doesn't mean it's going to be a perfect trade every time. In fact, NVIDIA caught me off guard. I'm in NVIDIA at 180. I get taken out of the position at 135. Absolutely getting kicked in the ribs. But we learn from that. You're going to win some, you're going to lose some. At the end of the day, the bills don't stop. We have to stay the course. Right? If you're not going to work a 9 to 5, if you don't have your health and you have a small portfolio and that's how you're going to generate your money, well, guess what? You have to stay the course. So many people this year have absolutely bailed, and I feel for them. I feel for them because at the end of the day, Verizon isn't kicking down any benefits saying, hey, you don't have to pay your bill. Hell no. You have to pay the bill, so you have to stay in the game. So I hope all of those that have given up on this stock market, I hope you come back. I hope you change your mindset. See, my mindset, whether the markets are up and down, we have to put money on the table, man. We still have to pay the bills. I don't understand how anyone can just walk away from what they derive their income from. That's almost like, people just leaving their jobs because maybe they didn't, maybe that month's production wasn't up. All right? I don't get it. That's not my mindset. So I'm encouraging everyone out there that's watching this video to really get the mindset that, look, the bills don't stop. You have to stay the course. Okay? So 2022 has been a bit challenging. One, the 9 to 5 is absolutely taking up a lot of my time. I have a different schedule and it's just not vibing this year. Now, starting the year, I had some good months. I mean, come on, March was a $17,000 month. I'll take that every day of the week. I had a lot of steady Eddie trades, knocking down 200 here, 300 there, to the point where we're generating 6,000 a month, 4,500 a month, 6,400 a month. You can now see the consistency in my trading, right? So being consistent is the key here, because now I can consistently have a budget, right? I can now budget my life around my consistent selling premium trading. Okay, so here we are in 2022. We're going to probably make, God willing, about $60,000 this year. If we don't get there, that's okay. Because for me, right now, if I stop trading, that's pre-tax $5,100 a month. And I'll take that. I will absolutely take that, just as I'm sure most of you will. Now, that's how I'm going to use the selling premium strategy moving into next year. So next year, trying not to overreach, trying to be more consistent, trying to use the bigger S&P type companies to generate cash flow that is consistent. That's the key. Now, we are going to use the poor man's covered call. We are going to continue trying to use the covered call with dividend capture. We are going to continue to use our long-term buy and hold stocks for doubling our dividends using covered call writing. And there's some other things I'm going to do. This is why, if you want to be a member of my premium service, I got that one free month. We're not going to talk about that now. At the end of the video, you have a chance to pick up a special premium membership, and I give you one free month. But here's the deal. That's what we're doing next year. If you need that absolute kick in the ass, I'm your guy, because next year, like I said, we're going to do a lot of exclusive content at the membership. Go to cptdashboard.com, click Upgraded Dashboard. I'd love to welcome you aboard. Now, before I get to the other income sources, I do want to show you something. Right here is where my trades this year start, okay? A lot of times I say I make thousands of trades, and some people think, oh my gosh, one, he can't be making thousands of trades since he started this, and two, that just sounds like too much work. I want you to stay focused here. I am an active, successful trader, and I love having 13, 14 positions. You don't have to. This is why this strategy is so fabulous for the cash flow investor, because you could have 1, 2, 3 stocks. You could spin those stocks throughout the month, write those very typical 30-day covered calls, generate that 3% wheelhouse cash flow, and repeat and rinse. You can do this all year. And what you're going to find is that you're going to have success if you do your homework and you get your experience. What you'll find is the confidence what you'll find is success. Remember, the covered call strategy, there's 3 possible outcomes. You win 2 of them. And I'll tell you what, the third one, depending on your mindset, might be a winner as well. Now look, over the next year, we're going to talk a lot about that mindset, so I want you to stick around. Subscribe to the channel and bang that like button if you like what you're hearing. Right now, it jacks me up. I'm going to see how many likes I get on this video, and if I get 100 likes, I'm going to come back next week with a fun video you're absolutely going to love. Now, with that said, look at all these trades. And by the way, this J row right here, this is all of the profits and losses, right? This is my P&L. So I've had a lot of wins. Notice they're just little crumb trades, right? If you look at it, 192, 520, 720, 180, 140. These are little crumbs put into the monthly cash flow wallet. And I'll tell you what, that's how we're generating cash flow in retirement using the cover call strategy and the cash secure put strategy, for which we use as well. So I just want to show you how many trades I've done so far this year. You can really see that we get in and out of trades, and a lot of green trades there, a lot of green trades. Okay, so we're going to get into a couple things here that many of you might not know or even care to listen to. This is how I'm going to use the stock market to generate income. Okay, monthly dividend income. I'm just going to give you an overview of what I've set up. And maybe if you're interested, you could put a comment below asking me about this. I've talked about this in the past, but this is going to be a large part of my dividend monthly cash flow. Okay, so we're talking closed-end funds. Now, I've talked about closed-end funds in the past. Now, closed-end funds are what wealth managers will put their investors or clients into. What they are is this. Basically, a company like Colomus here, this is Colomus, and it's an investment I actually have, CHI. I call it CHI. What they do is this. A company like Colomus will say, we're going to create a fund. And this particular fund is going to be an opportunities and income fund. And it's going to have a structure, a mission statement, and they're going to go out and generate income using that mission statement, using that investment plan. That income is going to be a dividend distribution they send out to their investors of CHI. So with that said, if you own 100 shares of CHI, it's going to cost you right now $11.08. Now, CHI pays a fat monthly dividend. Every single month, they distribute their dividend to their investors 9.5 cents per share. So think about that for a second. On an $11 stock, they're distributing almost 10 cents a month. Okay, and they do this every single month. And they have done this every single month. And in fact, this goes all the way back before the 2007 real estate crash. Okay, so they keep paying their dividend, and sometimes they cut their dividends, sometimes they raise their dividends based on the stock market. Now, here's the deal. Let me finish up on what closed-end funds are. That company, Colomus, they put a team together, and they say, look, we're going to go IPO with CHI. Okay, CHI right here. And what we're going to do is we're going to go public, and we are going to offer shares at a price, and that money invested, right? When people pony up the money to invest into CHI, okay, CHI, it becomes a closed-end fund, meaning no more money gets invested, right? No more money gets invested. So they take the original IPO money, and now they start spinning it. And what they do is they generate that monthly dividend for its investors. And as you can see, CHI pays a steady 9.5 cents every single month. So what you're looking to do here is accumulate as many shares as you can. And if you don't need the money in retirement just yet, you could have that drip investment, dividend reinvestment. And what it does is it buys shares, and you're now accumulating more shares. Okay. So now you have more monthly dividends coming in. And now a couple things are happening. Your cost basis on CHI is reducing, but also you're starting to collect more and more shares. So if you own CHI for 10 years or 20 years, you go from a small amount of shares generating a small amount of monthly dividend to potentially a giant amount generating real monthly income. Wealth managers, they will put a big portion of retirees' portfolio in closed-end funds, generating almost 9 to 10% cash on cash, and it gets distributed monthly using closed-end funds. And I have about 6 of them. I'm generating over 30% of what my cash flow needs will be, and it is passive. It just comes in and it comes in and it comes in. Chai's going to pay the dividend on January, February, March, April. Wealth managers love using closed-end funds for their clients because they can get high-end returns, and it comes monthly. All right, this is one that most people know. We're talking dividends. We're talking great companies that pay fat dividend. Now, dividend investors absolutely love stocks like 3M that pay $1.50 per share. This is great for dividend investors or cash flow investors, because what happens is this. You own companies, great S&P type companies that ebb and flow with the stock market, right? So if you're an investor and you're a little iffy or shaky about the market, great companies like Microsoft, Apple, Bristol Myers, Merck, 3M, look, they are going to be here for the most part until after we die, right? So here's the deal. You invest in these great companies, they're going to pay anywhere from 3 to 5%. You know, some of those great utility companies I always talk about, like Southern, they pay up to 5%. Now, I know somebody will say, hey, high dividends. Oh no, red flag, very scary. You got to look at how they derive their dividend before you start talking that junk, all right? Companies like Southern derive their fat dividends through selling bonds, and quite frankly, they have a great business. They sell energy, and they also are a utility. So that's really what they do. They generate fat dividends for their investors, and for the most part, they're allowed to do whatever they want, right? So companies like Southern pay the fat dividend, and it's a steady Eddie trade. Sure, it's a stock just like any other stock. It has volatile times. Southern will go from 40 to 60 to 80, back down to 60 to 40, but you're looking for the dividend, and that's the big deal. You're looking for that dividend. They pay the 3 to 5%. You collect it. Now it becomes part of your retirement dividend income. So here we are. We're writing covered calls. We're collecting dividends from closed-end funds. By the way, closed-end funds, when you buy Chai for $11, do not expect it to go anywhere. Its job is to pay the dividend. If you get a little stock appreciation, life's great. But for the most part, those kind of investments, you pay the $11 per share. If it goes to 10 or if it goes to 12, you don't care. You want the monthly dividend. I've held Chai for over 12 years. I don't even look at it. Yeah, and it has fallen from $11 down to $9, but it has also risen to $16. I don't even look at it. Now, the dividend companies, they're going to pay their dividends every 3 months. So now what you want is you want a collection of stocks that will pay dividends on every other month. So if 3M pays a dividend on, let's say, November, well, I'm not going to collect dividend income from 3M for 2 more months. So I have to have stocks that'll pay in December, January, February, March. That's a great opportunity for you to go out and look at those stocks. I know Kiplinger does this, where they'll have every single month stocks that produce great dividend. And that's one of those deals where you can create a great dividend paying portfolio, collecting income monthly, although these stocks pay quarterly. Dividend income is how a lot of retirees use a portfolio of great S&P type stocks to pay for their retirement. Now, this video is not brought to you by Colomas or anything I talk about, but I use Colomas. I have many Colomas investments, Chai being one of them. I also use CHY. You can go to their website, you can look at their different closed-end funds and the returns they have, okay? So it's very important to do your research, particularly with closed-end funds, because remember, closed-end funds are essentially mini companies generating cash flow, but they don't have to answer to any investors. They can literally drop a dividend and we are stuck holding the bag because Wall Street will absolutely sell them off because they hate uncertainty. So that's one of the biggest fears with closed-end funds. You have to understand they don't answer to anybody. So go to its website, look at the track record of all these investments, okay? Colomas being one, Eaton being another. Look, you can Google this, find some great closed-end funds. I use Colomas and Eaton primarily. Now, this investment here is going to just absolutely bore you all. I love Franklin funds. Franklin Templeton, I think based in California, they have a lot of California high-yield muni bonds where you don't pay tax. Hey, here's the catch. You don't pay tax, but they don't pay much per share monthly. These are steady Eddie investments that, to be honest with you, I don't even know if they move in a 5-cent window. Now, this year's a little skewed, right? The market's crashing and we're getting a lot of volatility. But for the most part, these things do not move. As you can see, this Franklin fund literally moves from 1150 to what? 1126, 1150 to 1126. These things just do not move. Well, their only purpose is to produce that dividend. And look at the monthly dividends. Now, in this case, the Franklin fund here pays 3 cents a share. So you have to have a lot of shares, right? Well, these funds are tax-free, so you have to look at it a little differently. You have to look at it like, look, you're going to collect 3 cents, no tax. Colomas, say you use a closed-end fund. And again, these are two different investments, a muni bond versus closed-end fund. Much different. This investment here is actually a tax-free investment. You invest in it, you're going to collect that income tax-free. With the Colomas closed-end funds, you're going to pay tax. So as I collect 10 cents a month with Colomas, I don't have to pay tax on that. Granted, it's dividend income. It's not as much as capital gains. You still have to pay it. Here with Franklin, you don't have to. So you're going to have to accept lesser gains or lesser monthly cash flow. So I diversify a portfolio that has some Franklin funds in it. So I can generate about $200, $300. We have it coming in. It's tax-free. I don't even look at these things. Okay, this is almost like a treasury note I put underneath my bed. But at the end of the day, they produce $200, $300, $400 a month. I'll tell you what, it's something to consider for all of you income seekers in retirement, because it's a rather safer investment, quote unquote, because look at that sucker. This market has even crushed muni bonds, 11.5 all the way down to 9.5. So there is risk in everything we do because it's nothing more than a monthly cash flow income generator. I don't even look at it. And to be honest with you, its sole purpose in the portfolio is generate income, monthly income. Now, of course, none of this is investment advice. What did I say at the beginning of the video? I'm showing you the world through my eyes, and I'm talking about how I'm going to fund my retirement. If any of this interests you, you got to do your research. Can't be lazy. Got to go out, do your research, make sure you're comfortable and understand the investments you're buying into, okay? Got to be accountable, but you can make great decisions with a lot of investments that are pretty steady Eddie. And to be honest with you, Wall Street puts all their clients into them. Here's Franklin's website. You can Google this as well. Franklin's going to show you all the different types of muni bonds they have. Again, you do what you want. This is what I'm doing. It's about steady, consistent cash flow. And you have to be diversified. Okay? If you're going to be smart, you got to be diversified. So that's one of the key things I really want you to take away from this video. We have to have a plan. We execute the plan. We have to be smart. We have to be accountable to learning about these investments. So at the end of the day, we can be successful. Now, I know a lot of you were hoping I'd tell you how much I have and how much I'm going to make per month. Look, at the end of the day, don't worry about me. Worry about yourself and how you're going to generate positive cash flow using the stock market. Look, this is not something to fear. So you have to get over your fear, because look, at the end of the day, the bills are going to continue. They're absolutely going to continue. So you have to stay the course, and you have to have a mindset that you're going to use the stock market to generate the monthly cash flow you need. Look, join me at the membership, because something tells me over the next few months as I get into retirement and we really start putting out great content, as I've always wanted to do, I'm going to dedicate my second chapter of my working career right here at the membership. And I'll tell you what, I'm going to show you exactly how I'm going to trade my 401k. Oh yeah, we haven't even talked about that. When I retire, I'm going to have access to my 401k, and we're going to trade that where we're going to try to bring in $1,000 a month selling premium, I know I'm going to have success. Now be sure to take advantage of the 1 free month of my premium membership. Look, if you want to be a part of a community that sells premium, puts cash flow on the table, I'll tell you what, my 1 free month offer is the best. Hey, take a peek over a successful active trader's shoulder. If you have questions, guess what? You're a member. You have access. I love answering your questions. Look, take your financial future in your hands in 2023. I am, and you'll get to see how I navigate this stock market in 2023. It is going to be an absolute fabulous year for selling premium. I want you to join. I'm going to give you the 1 free month. That's like 45 cents a day. Look, go to my website, cptdashboard.com, click Upgraded Dashboard, pick up your 1 free month. I'd love to welcome you aboard. If you like this video today, bang that like button. It lets me know you like what I'm doing. Next video, we're talking about an at-the-money strike, picking up fat premiums. This is how we do it here, putting cash flow on the table so we can pay the bills, live the good life. So subscribe to the channel, and until next time, be safe, be healthy, most important, be lucky, and may all your covered calls be profitable.